Good morning. I hope you guys are doing well. It's me, Adnan Rahman, the market analyst for Errante. In this short video, I'll be explaining you about the fundamentals of the USD and especially the upcoming NFP news, what we can expect from it, and what are the green shoots that are arising in the USD strength. Okay, to understand that, what we'll do is we will look and start from the currency meter. That is basically a fundamental currency meter, and it is derived by calculating the fundamental picture of each indicator. Okay, so right now we see that USD, okay, is on 44. Okay, the reading for the USD is 44, and if you remember last week, in my last week images, you could see it was around 22, somewhere around 22. So now it has increased, okay, to 44. Okay, this is the fundamental strength of the dollar. Okay, and now if you look at the current market sentiment, stands at 65. That is the risk on, means that the traders or investor will favor towards euro and the pound, especially the pound, because pound is the one that has that neutral reading as compared to the euro, which is at 33. That's also down. Okay, so keep this in mind. This was your fundamental picture. Now let's move towards the main event of the week, that is the job market. So what do we have from this job market? Okay, let me increase the size of the screen so you can see carefully. Okay, the main fundamental picture is what I'll be explaining right now. Two cuts are still seen for this year. Okay, so two cuts are still seen for this year. One we have in October and the other one is in December. So there are two cuts that are expected. Now let's see where are these two cuts and how the market is looking into them. Okay, this is the interest rate forecast. Okay, interest rate forecast, and then you can have a look over here. This is one cut we are expecting and this is the second one, but still the market is expecting further cuts down into 2026. But here comes the main thing. Look at this. This is the expectations, or what the comments put out. As expected, 25 basis points, with median FOMC projecting two cuts for 2025. This is what we already know. And then we see strong growth. Okay, there is strong growth, and let's look at the growth picture. Now look at the growth picture. One second, just let me look at the growth picture. If we have a look over here, on 25th of September we had this final GDP, and it rose to 3.8% from 3%, and the previous was 3.30. It's a 0.80% of increase. Okay, now this is a robust. Okay, this is a robust data. And then besides this, we also saw jobless claims. The jobless claims had a decrease of 17k, and it was a decrease, or data was like 2 months down the line, it was in a low levels. Okay, let me show you that as well. If you can have a look over here to the jobs data, let's zoom in a little. Okay, see this one. This was the peak of 263k, I think so. It was 263k, and now we had these two trends that were lower as compared to this major peak towards the upside. And this 223 is what is expected for now, the forecast for now, the upcoming data. And then the high is 230. So what it means, if the value exceeds 230k, okay, then it's bearish for the dollar. And if it's below like 218k, okay, it's below 218k, then it's a kind of a bullish news somewhere below this 218k. 218k is the lowest level. That's why anything below this is something good for the dollar. Okay, so what we were talking about is this one. Now let's get back to this. Okay, what do we have? We saw growth is firm. Okay, that is what we saw now, 3.80. And now let's see what next information we had was the inflation is sticky. That's correct. Inflation is sticky. Let's go to the inflation picture. What do we have here from the inflation story? If you look at the core PCE on year level, the expected high was 3.2, expected low was 2.7, and the market came in 2.9. It's in between these levels. Okay, so it's a nothing burger, not big one. It's elevated, but nothing to be focused on, because Federal Reserve is more tilted towards the employment side, and now they are tilting towards the third mandate of Federal Reserve. That is what I'll be explaining in the next videos, what that third mandate is. It's basically quantitative easing, okay, keeping the rates stable. That is what I'll be discussing in the next video, and this has properly been signaled in the money markets. I'll be explaining this later on, so no need to worry. Now let's look at the other one. If I look at the headline CPI, it's also up. It's on 2.9%. Okay, and same goes for the US core PC. It's on 3.1%. These all values are near the upper band. Okay, so it's a sticky inflation. Okay, and then headline core PCE. Headline PCE, sorry. Okay, the high expected was 2.9 and the low was 2.6, and I have already given these values before the event, and the value came in 2.7. It was higher than the 2.6 and 2.6 for the last 2 months, but still, as it's in this range and the mandate is towards employment, that's why this has not got that much of attention. Okay, so what do we know until now? Okay, for what do we know until now is that 2 cuts are expected, and then we have growth, high growth, we have good inflation, and the dovish hopes largely priced in. Okay, what were the dovish hopes? These were the dovish hopes. Okay, that I've already told you. This downward movement was the dovish hope. This was largely priced in. We saw weakness in the dollar. Okay, so what's happening now? That from the latest news, this dovish hopes have been reducing. Okay, this dovish stance has been reducing. Fed is not that kind of a dovish as it was earlier. Okay, so US shorts are crowded. Okay, it's overextended towards the downside. Okay, and to extend the dollar slide, okay, if the dollar has to go more down or more towards the selling side, okay, NFP likely needs a shocker print. A shocker print. It's not just a normal print. It needs a shocker print. And what is that print? It's on a negative side, a negative 20K or a negative 40K. Like this is the 32K print we got. So it's somewhere over here like 20Ks. Okay, somewhere below the chart. Okay, over here, not somewhere like over here, hovering around here. That what make a difference. And even the forecast is like about 50K. Okay, so what we need is something negative. If there is that negative expect a hard bearish expect, then you can expect the USD to go down. Given that, you might see some weakness or upticks in this unemployment rate as well. Okay, the unemployment rate as well. Right now, the unemployment rate is on its highest level at 4.30. Okay, and this 5.0 is the threshold, because once the market or the unemployment rate exceeds this level, you can expect recession. Okay, and then what are the values expected now for the upcoming news? It's 4.4%. That's the high, and the expected low is 4.2%. So anything between this might be a nothing burger or a no burger, a no brainer. You can use a term, it's your wish. Okay, and anything outside of this range, okay, anything out of this range, like here and here, like below this or above this, is something that might be concerning. Okay, obviously if it goes up, then it's bad, and if it goes down, then it's some sort of a bullish stuff. Okay, so I hope I've explained this very well. Now let's complete the picture we were talking about. Okay, jobless claims is also done. Okay, NFP. Okay, so this is what we were talking. The negative 20 or negative 40K is expected. So right now, nothing is that much of a bearish. Okay, everything is in line. So expect green shoots in the USD. Okay, and if you look at the other data right now, we might see USD fundamentals going towards the upside. That is, GDP is okay, US jobless claims is okay, and then PCE inflation are also moving towards the upside. They are sticky. Okay, and this preliminary GDP is also towards the upside. Okay, it was above from the forecast, like 3.10 to 3.30. Okay, all of these things you can see. It's an updated data. How I have synchronized is that whenever the news is released, I add a column over here, and if there is an update, okay, it updates in the in that separate cell. Okay, and here is how you can synchronize them by 1 2 3 4 5 6 7 8 9 10. Okay, hence this way you have your dates synchronized. Okay, so in net short, what do we know is that while looking into the NFP as the main driver for the market right now, if we need to go towards the shorter side of the dollar, this print is needed. Okay, something in a negative side, and an unemployment towards the higher side. On the other hand, if there is a strong data, then the green shoots in the USD may see some upward movement, and that is what we can see right now in our charts as well. Okay, gold, it's going up. It I sometimes I think it has a mind of its own now. Okay, it's going up. It doesn't care about the dollar's strength anymore, dollar strength or dollar weakness. It's towards the upside. Okay, and in the start of the video I told you that there is a concept of risk on right now. Okay, that can be seen in the AUD. Okay, AUD pairs and the Euro pairs and the GBP pairs. Okay, that is what I've been telling you. Okay, and now this week we have RBA as well. The next video will be for the RBA, and besides that I have something to share regarding this gold, that what is happening with gold. Okay, then that's it. Okay, that's it for now. If you have any questions, you need any technical analysis for any chart, please do let me know. I'll be more than happy to assist you. Thank you. Have a good day.